Everyone, hope everything is going well. All right. So I'm looking at JC Peretz once again on Twitter, and he has an interesting article. And before I begin, I just want to say that I do believe the market has a little room to the upside. However, I'm slowly but steadily getting out of the market because I don't like what I'm seeing. And I'll take a look at a few things that I don't like. JC Peretz has hit this. Consumer hits 10-year lows, and he's looking at consumer discretionary, and he's looking at it versus the S&P 500. So the underperformance hasn't stopped, and you could see it over here. The consumer has been getting beaten up, and we haven't seen these levels, consumer discretionary versus the S&P 500, for the last 10 years. It's not good. Yeah, consumer discretionary has heavy weightings of Amazon and Tesla, which have been getting smoked. But guess what? There are other problems out there besides that. And he looked at an equally weighted basis, consumer discretionary. That's hitting 52-week lows as well versus the S&P 500. So red flags all over. That doesn't mean market's going down tomorrow, in my opinion. It just means that, hey, look, more evidence that the economy isn't as hot as compared to what we see in price action for the stock market. And you can see over here, it's another warning sign, XLY versus the S&P 500. I did notice this over here. Morgan Stanley chairman resigning. He used to be the CEO, Gorman. Why is he stepping down at the end of the year? I'm just asking questions. Why are you stepping down? Do you see trouble ahead this year and next year? It must be it, because why is Vanguard CEO stepping down? There's got to be a reason why you don't want to be a CEO during this time. Maybe you want to leave right when everything looks good. He's leaving what, July, June, the Vanguard CEO? New CEOs incoming. Red flags all over. Now, despite me saying, hey, there's warning signs in the economy, the issue that I see right now is not issue, but the reason why I don't think the market has topped out yet. And I see this, I always look at it. Maybe I'll get it translated if that works. It's not working right now. But anyways, this individual posts the Bank of America Bull Bear Indicator. It's a very interesting indicator. The higher it is, it's probably, in my opinion, not the time to be buying. Probably a better sell opportunity. Over here, when it was like zero, almost 2 years ago, that was a better time to buy. We're at 5.6. So looking at sentiment indicators like this, I don't think the market has topped out. That's just me looking at it from an analytical point of view. Yeah, I said I think the market's going to top out in May, but the sentiment hasn't topped out yet. We don't see giddiness in the market, in my opinion. And that's why I'm going to most likely wait to short. I thought I'd be like getting into more aggressive short positions, but I always have to look at the data, and this is what the data says. And I still have like a long-term projection, when I do put options. Now, the thing for me is if I do believe the market's going to crash later this year and into next year, right now, though, the volatility is low. So for me to buy the put option, even if it's longer term, it's still relatively cheap. So that's what I'm looking at. Anyways, you do what you want to do. I'm just looking at it from my own perspective. Anyways, let me know your thoughts, and I'll talk to you later. All right, see ya.